Singapore has cut its official growth forecast for the second time this year, as its economy grew a tepid 0.1% on year in the second quarter. The country's full-year GDP growth is estimated to come in between 0 to 1%. Cheryl Lin with more.
78-year-old Mr. Lim Nyak, who owns a pajama stall at Chinatown Complex, is feeling the pinch from slowing business.
农历新年过后到现在的生意会影响到有30%这样。
Other retailers in the same area concur. They have also seen sales slipping in recent months. But other retailers selling big-ticket items like cars or household equipment could be impacted more acutely. The wholesale and retail trade sector shrank 3.2% in the second quarter, while the manufacturing sector contracted by 3.1%. However, finance and insurance grew by more than 5%, with information and communications and construction sectors close behind. In the second quarter, the economy grew a marginal 0.1% on year, the slowest in a decade. The Trade and Industry Ministry has slashed its full-year GDP forecast to 0 to 1% from an earlier downgrade.
Since May, the global growth outlook has weakened further, in part due to the escalation in the US-China trade conflict. Just last month, the IMF downgraded its global growth forecast for 2019 to 3.2%. The global electronics downswing has also been sharper than expected.
Economists say the downside risks have grown.
The ongoing growth risks, as well as the drags, headwinds to growth, is really much more severe than what we have thought, especially with the new policies, with the new US-led tariffs of 300 billion worth of Chinese imports. Brexit, given Boris Johnson's elections as well, and the risk of a no-deal Brexit seems to be largely magnified right now.
The slowdown of the Chinese economy and geopolitical tensions in the region are also putting pressure on Singapore's export-led sectors.
The outlook for the second half looks pretty dim overall, because this external-oriented sectors actually account for a large share of Singapore's GDP. We think 3Q numbers are going to continue to remain weak.
Singapore's central bank has said its policy stance is unchanged, but added that it's monitoring developments. Its next policy review is in October.
Given weakening growth, rising recessionary risk and muted inflation, we do expect the MAS to ease. And we also think that the government will introduce some stimulus measures to help especially those sectors that have been hard hit by the trade war.
Growth for the first half of the year stands at 0.6% according to MTI. But on a quarter-on-quarter seasonally adjusted annualized basis, it shrank 3.3%. Analysts say it puts Singapore closer to a technical recession, defined as 2 straight quarters of contraction. However, some analysts remain split if this may happen.